Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. This morning has been one heck of a roller coaster. It has been a wild morning for the market with a lot of unusual volatility. But before we get to that, I want to talk about an update I've made to the ON GridBot directly. It is now capable of handling multiple assets simultaneously or in parallel, meaning that instead of having the lag of going through every single asset one at a time and then cycling it over, it can now trade 2, 3, 7, 16 assets simultaneously, and is actually only limited by your specific hardware. I've been running this now for several days with real money, and it's done very well. The advantages is that it now is capable of getting more volatility action in trading, meaning it can react faster to volatile moments that might bring in slightly higher profit thresholds. The disadvantage, and one that I felt this morning, is it can react quicker to stop losses. And I felt it very clearly this morning, taking 5 stop losses back to back. That hurt. Not as much as losing the entire account, but it hurt enough that it's going to take at least 2 days to recover from it. That is really what I'm going to talk about in this video, and why this technique that I'm using and developing for grid trading is so much more critical to understand and a better way to grid trade than the traditional fixed boundary grid trading paradigm. So as you see on the screen, this is my log of all of my activity this morning. You see my buys, my sells, and my 5 stop losses. Oh, the agony of the pain. This smarts, and we'll see it in picture form in a few minutes of just how much it smarts. But it worked beautifully. This is the second major market shift that this bot has survived absolutely perfectly. I couldn't be happier at the results, even though I'm not happy I lost money. The bot is already beginning to recover the money on my inverse correlated pair. So it's doing what I wanted to do. It's working. So now let's get to the pretty little pictures where we can see just how well it is working. And as we can see from the first chart, the clear and definitive big drop on the right-hand side of the market, right here. My 5 stop losses. Now, since my account is trading 2 pairs, even though the stop loss took place on USD franc, I'm going to feel it on Euro USD because it's in the same account. But you'll notice from the profit graphs that there's actually a difference in the charting. And that difference is specifically the profits that Euro USD took in the interim of USD franc taking a loss. A picture is worth 1,000 words, and you can clearly see just how well this floating grid technique is actually working when the market really heavily moves. Because we see here, this is 4 stop losses back to back. That was a painful experience as well. But those 4 stop losses quickly turned into some very massive profits. So I suspect, and I can already see here the recovery process, but I suspect that the 5 stop losses here will equal the same amount of massive recovery over the next couple of weeks as the previous stop losses did. Now you can see that this really isn't a lot of time for the amount of trading I've done. So I'm quite pleased with the stability of the technique. So let's look at the USD franc profit curve specifically. And you'll see finance charges, little dips along the way, and stop losses. All of that shows up in the profit curve. And that is really your best indicator of long-term stability. So let's keep going and look at some of the other metrics of this process. Here is my Euro USD buys and sells for the week so far. Pretty straightforward and simple. Remember, this is a grid trading technique. So it's going to have multiple buys and multiple sells on a daily basis. Notice that Euro USD has not taken any stop losses this week. But USD franc clearly has 5 stop losses today and 1 stop loss yesterday. That is a bit of a painful and brutal reality. But nonetheless, the bot worked perfectly. Now these two charts show the dynamics of the grid system in motion as it floats with the market. But let's actually see what the market looks like in motion. And we see that here with the frequency counting. Euro USD frequencies. We see clearly the price and how much that price was hit during the sampling period. This information really shows us where the market is. More so, really, than what the order book can. Because while the order book shows support and resistance at one level, this shows support and resistance by the actual number of times the price visited a given point. So we can see on the lower end of the spectrum, prices here hit around 60 times, while the upper end of the spectrum are a little bit above 60, around 65 times for the high point. And then we see the extreme of the market pushing on the actual boundary on where the market is moving. So we can see clearly a very definitive moving and flowing market. That is absolutely essential to deciding how and when to place trades. Now let's look at USD franc, and you see clearly how the market is actually shaping up. Very interesting and very, very telling in terms of the direction of the market and where my stop losses got nailed out. So it's a brutal wake-up call to a market that is always flowing like a raging river. Now, let's actually see that in bid-ask price action. Let's take a look at the Euro USD. And you'll see where the bot has calculated the frequency count and then the predicted consolidated price. So the bot believes that the Euro USD is going to climb, even though the bid ask pricing is drastically below that at this point. But let's look at the USD franc, since that's been the most telling coin, or I should say the most telling asset today. And you see over the last week just how rapidly it really has changed within the market, including some extremely volatile points where the bid ask price really separated, showing a significant volatility rate. You could also see that the price is drastically above the predicted consolidated price. So this suggests that the price is going to drop in the future. The maximum frequency count is also well below the bid-ask price as well. So again, this gives a hint as to where the market is likely going to go over the next couple of days to a week or so. Whether or not it does, of course, is anyone's guess, but it's how the bot is able to make decisions and remain profitable, which thus far it has been able to do quite well. Not everything is as cut and dry in the market as what these charts make it out to be, though. And that really is the underlying devil in the details. Short-term losses will happen, and they are necessary. And if you have been following my articles on Patreon, you'll know where I've been talking about traditional grid trading and why it always fails. Traditional grid trading relies on a fixed upper and lower boundary that can't actually change with the market. Subsequently, if the price goes above the upper boundary or below the lower boundary, you lose money in both ways. The upper boundary just means you sold everything off and you're no longer making profits. The lower boundary means you're going to take a very hard and brutal loss across the board on every position. A floating grid technique, like the one I have built here and use, will allow me to take a few short-term losses, but then let the entire process recalibrate as the market moves, so that my grid floats with the market. So I am never below or above any boundaries, as the grid just rides the waves of the market itself. So that gives me the opportunity to profit no matter what. Short-term losses will become long-term profits. Understanding your risks and your budget and mitigating those risks appropriate to your budget is what this entire process does from beginning to end, in a way that meaningfully is able to keep you in the market and consistently profitable. As you can see just from this short time period, from May 13th to May 31st today, I've done about $60 in profit total, although now, at this moment, I'm about $40 in profit, where I lost $23 from the 5 stop losses. But I'm still $40 in profit. That is enough to pay for my overhead of the VPS that actually runs this bot. Critical and careful attention to these details is what will bring long-term profitability. So as you look at this information and you look at your own trading, Understand that you need to move with the market. If you can't ride the waves of the market, you aren't going to survive. Any kind of a fixed situation is going to wipe you out. As we look back since I've started trading this asset, you can clearly see I've done a lot of trades. And you can see where I've taken stop losses along the way. That is important as the market moves and shifts and flows. You must be dynamic in your trading. You must be flexible in your trading, because that dynamic capability and flexibility always translates into a bigger picture and a wider radius of functionality. So, track your bid-ask prices, track your spreads, watch the volatility, and make careful, consistent decisions about your trading. And most importantly, understand your risks. That is the most critical part of trading. Understanding your risks. If you have any questions, please leave them in the comments below, or visit the support server, or even the Jackrabbit Relay GitHub page. Please like this video and help others find it through the YouTube algorithm. Thank you for watching, and until next time.